Let's bring in Scott Bauer. He's the CEO of Prosper Trading Academy, and he's joining us here this morning to take a look at some of the recent price activity we've seen. Scott, it's good to have you with us this morning, and thanks for taking the time to come on the show. I want to begin with the yen to a new high this week. This year, they just posted a new high, back to levels we haven't seen since March of last year. More to come, Scott, because if we can get above the high from last year, we're talking November 2016 levels.
Yeah, it certainly looks like it, Ben, because you know what? We don't know when, if, where, how anything is going to be not even just resolved, but see any productive steps in this tariff issue. Right now, you know, the pulse is more on escalation than it is on any sort of resolution. So the longer that continues, obviously the higher the yen is going to go, the more pressure there's going to be on the upside here. So at least over the next probably the full quarter, but at least the next 4 to 6 weeks, I think we get new highs.
Yeah, you know, it's interesting to see because this is with the dollar, which has been holding near highs as well. Both the dollar and the yen holding near highs simultaneously.
Yeah, that's an aberration. You don't see that. You go back in time and you go look at all the charts and you don't see that. And I think that really what that tells people, what that tells the retail investor and really tells the world is there's no other game in town. Yeah. So if you're looking for that, and I really don't like the phrase safe haven, but if you're really looking towards, you know, parking your money somewhere or that safe haven, you go to the yen, you go to the dollar.
Yeah, certainly something to really kind of marvel at in many ways in terms of the strength we've been seeing there. Now, one thing that I've been watching also, Scott, is the euro, which has been inching up. The Italian Prime Minister shuffle has been going on. The situation, it's not a great one necessarily, but it seems like things could be worse. And there does seem to be a little bit of a back to normal or kind of a back to basics type approach at this point. I'm wondering if that's what's helping the euro currency firm up a little bit off recent lows.
Yeah, I think what you just said could be worse is really on top of it. You know, everyone was expecting the absolute worst. They're in some talks now. Now, could you imagine if our government was in a situation where they were negotiating who's going to be, you know, in the role of prime minister, who's going to be in the role of speaker of the house, you know, anything like that. I mean, and that's what's going on there. But I guess from our perspective, you look at it, and like you just said, it's better than what could have been. And that's why I think it's propping up the euro a bit.
Well, one thing that's probably also propping up the euro a little bit is Jeremy Corbyn, the Labour leader, has called for a meeting with leaders of the opposition parties today. And that's, again, to discuss basically ways to block a no-deal Brexit, counterproductive and potentially a waste of time, I'm wondering, because, again, it seems like they should be focused on trying to resolve the issues, not so much trying to block, you know, them moving forward to try and really just honor the referendum.
So you and I discussed this last week. Is this maybe just another tactic or another way of kicking the can down the road a little bit, where maybe this October 31st deadline is going to get extended again, whether it's end of the year or maybe in the first quarter next year? I don't know if there's any odds, any percentages out there that may happen, but it certainly seems to me like that's what Corbyn and his cohorts are trying to do, because they're not going to come to a resolution here for you know, a softer Brexit. It's just not going to happen, and it seems to me like maybe they just want to extend this a little bit.
Yeah, you know, one thing I noticed is Boris Johnson said, I do think that the EU does tend to come to an agreement right at the end. Clearly for us, the walking away, as it were, would come on October 31st when we would take steps to come out of the terms for which we'll have by then made absolutely colossal and extensive and fantastic preparations. Are they prepared? I'm wondering, is there any way to fully prepare for something of this magnitude, Scott, and of this scale?
I mean, I would take the other side of that and say they are completely unprepared at this point. You know, they're 8 weeks away from you know, you just used the term colossal, from a colossal shift in economics in the EU. And it doesn't seem to me like trade patterns are set out or there's any initiative right now as to actually how things are going to react on November 1st if this happens.
Scott, I noticed we had some numbers this morning in terms of like housing, A couple smaller numbers in terms of regional Fed activity this week, but it seems like the focus is really going to be on GDP and then the personal income and spending later this week. What are you going to be more closely watching?
Yeah, I think GDP is going to be a very snap number. When I say snap number, I mean if we get a stronger number, look for bonds to actually sell off and rates maybe tick up a little bit. The concern to me, and it's not a bad concern, but the thing to watch for me is if we do get a strong number, if we do get a robust number, how much that plays into what the Fed may do, 3-4 weeks from now, but more importantly, how the market's going to react to that.
Yeah, speaking of how the market's going to react to that, I know we've been talking about this for a little while, Scott, but it's still got me scratching my head in terms of the U.S. dollar, which continues to hold upper levels even amidst rates to the downside. Now, we saw yields hold off from new lows for the year, but we certainly saw the Treasury futures products, the bonds and the 10-year into new highs last week or yesterday. Now that I think of it, at one point, something's got to give here. We have to see, in theory, either the dollar come off these elevated levels or rates come off lows, you would think.
No doubt about it. This is going to be just for an economic geek like myself or someone that was just really interested in the markets, down the road, 3 years, 5 years, 10 years from now, this is going to be one of those case studies that people are going to evaluate and say, how did that happen?
Yeah.
Because what we're really going through right now, what we're seeing right now, historically, that just doesn't happen. So you're right. Something has to give.
Yeah, a big part of that case study, a whole chapter will probably be devoted to trade and the back and forth in terms of the U.S. versus China. Scott, really appreciate you joining us here and giving us part of your Tuesday morning. Traders, that's Scott Bauer. He's the CEO of Prosper Trading Academy.